This is a case study of my bullish play on Palantir. In this video, I'll go through these topics. You can find the timestamps down below. Number 1, why I picked this Palantir stock. Number 2, implementation of my 3 investing strategies. Number 3, risk management. Number 4, reflection and looking forward. Welcome back, mindful investors. I'm just here to share ideas that can make or save you some money. If you find any value in the video, feel free to drop a like and subscribe to the channel. That would be much appreciated. Number 1, what is Palantir and why did I make this bullish play? Palantir deals with the highest level of security, mainly internet security. So far, the main clients are government agencies. The CEO and founders are at the most elite level. Alex Karp and Peter Thiel, they're all billionaires. Peter Thiel, as some of you may know, is one of the early founders of Facebook, PayPal, Y Combinator, and Palantir. The market cap of these companies total over $1 billion, so that shows how credible this company is. There's a saying that you buy the jockey and not the horse. Back in the day, the main visionary was Steve Jobs and Apple. And nowadays, there is Elon Musk with Tesla, PayPal, and SpaceX. Alex Karp is no different. If you ever hear him talk, he is on another level. So I'm buying this jockey. There are a lot of unknowns in this company, since it only went IPO in the end of September. There wasn't any earning reports or street credibility. A lot of the Wall Street analysts has written off the stock because of how controversial this company is. All the revenue generated are from 100 contracts within government agencies. And this turned off many investors. In my mind, this is the opportunity, because if you only dealt with government contracts, means that you're at the elite level and you can charge a huge premium. And the fact that they generated the revenue from only 100 contracts, it means that the opportunity outside this bubble is huge. And the elite expertise is far beyond the Salesforce or the Snowflake. Like, this is Palantir. By definition, Palantir is the crystal ball, is seeing into the future. It's not a snowflake. If I have the money, why would I hire a snowflake to do my job? I hire Palantir, the people who dealt with the government agency data, the people who had a hand in finding Bin Laden. And in the early days, they dealt with security fraud through PayPal. They have an extremely long track record, performing at the elite level. So this stock, Palantir, it went IPO end of September at around $10, $11. Then it dropped to around $8.90 within a week. Then it just fluctuated within this $9 to $11 phase for about a whole month. My average entry price for the stock ended up to be just under $10 at $9.88. I wanted 100k exposure in it, so I bought all of it in this early phase with all the uncertainties out there before the earnings and all the Main Street hype. There's a fun fact that in this video on October 10th, I should put this crystal ball here. That represents Palantir. And this is when I entered the position. So there's a reason why I didn't push the stock in any of my videos. Nor did I push any one particular speculative stock, because I wouldn't know how you would handle it. Everyone's risk tolerance is different. For me, entering the stock at $10, even if it dropped to $5, I would still be fine. But for an average investor that put 10k in it and they dropped 50%, I wouldn't know how they would handle it. They'd probably sell when it dropped 20%, or they will just hold on forever, like most of the YouTubers say. You just buy it and hold on forever, and eventually it'll go up. But the fact is that these speculative stocks, it may never bounce back up. Some really hyped up stocks, it can just slowly grind away downwards and just eats up your portfolio. And if you implement some of the strategies of just keep buying and holding, you're just getting yourself deeper in the hole. And I never want to do that. What I'm trying to do in this channel is not giving you the fish, but to teach you how to fish. If I just gave you a fish, it can last you a meal or a day. But if I teach you how to fish, you're good for the lifetime. So why take my fish? Just learn the concepts behind it so you can implement it yourself. And that goes for any YouTubers out there. Like, don't just blindly listen to their picks because they do not have obligations to care about your financial well-being. They just want to draw views. We need to really understand that. Okay, number 2, implementation of my 3 investing strategy. There are a couple phases here. So first phase was my dollar cost averaging to get all the positions I'm comfortable with holding. My number was 100k Canadian. I'm comfortable with that because if it drops 50% and I'm down 50k, I'm okay with that. This first phase is dollar cost averaging, either by buying the stock straight up or selling put options to collect the shares that way. As you can see here, right now I have around 6,000 shares. And this number may fluctuate over time by maybe 1,000 or 2,000 shares, depending on my option plays. And my second investing strategy is by selling option contracts. Whenever a stock jumped up 10-15%, I would sell call options, saying that it wouldn't continue in this trajectory to around, $14-15. And a lot of times it didn't. And every time it didn't, I collect premiums. And every time it dropped, so let's say right here, it dropped from $15.50 all the way down to $13.50. I said it wouldn't drop to $12, $11, and it didn't. And if it did, I wouldn't mind buying the shares at those prices. So all the minuses means that I sold options. And most of it is in the money, but some of them aren't because of this recent spike that took the stock from $10 all the way to $18 in 2 weeks. If we look at it carefully, right here, it says that by December 18th of this year, which is a month away, if the stock hits $25, I have to let it go. I have to let 500 shares go at $25. But really think about it, this is a win-win strategy because I bought the stocks at $10 and I wouldn't mind letting it go in 6 weeks for $25, 150% gain. That's okay because I know the name of the game is volatility. If it can shoot up like this, it can also drop 50%. So I wouldn't mind taking profits off the table with this contract or even this contract. If it hits $30 by January, I let those go as well. But my core positions remain intact. And then my third strategy is going for the home runs. So right here, these are the long calls. As we can see here, January 2022, $20 calls. So this is a leap. It's more than 14 months away. I bought these with all these premiums I sold. All these premiums, we add up to be $1,000 here, another $1,000 there. So I just kept selling options. And whatever I get there, I bought these calls. Right here, it shows that I have a gain of 11K and a total market value of 17K, which means my principal that I put in was 6K. And it almost tripled in value because of this recent spike. We can't really rely on it. I don't expect the stock to continue in this projectile. It's just not very sustainable. But this is what happens when it kind of enters the mainstream. I think 2 of the big guys just entered the stock. George Soros and one other guy. They bought like 14-15 million shares like a week ago, and that's what's caused these spikes. Number 3, risk management. As I mentioned before, I bought into this speculative stock knowing that it's possible that I can go down 50% and I have to exit and take the loss. But it's kind of unlikely that I'll fall straight down. So with all these option plays I'm making, even if the stock goes down to $5, let's say, I wouldn't lose 50%. Maybe I'll lose 30-35%. because I've collected all these premiums. And this is how I'm handling the risk, by collecting these premiums to offset any possible losses. Another way of how I'm managing the risk is because of these covered calls. So as I mentioned before, I started with maybe around 7,000 shares and I sold calls at $15 when the stock was around 12. And I had to sell my shares at 15. But that's okay because I realized some gains. My 1,000 shares at $10 has gone up to 15,000. So I pocketed $5,000. In my playbook, it's always okay to take profits off the table. At the craps table in the casino, whenever the dice hits your number, you always have a choice to just take your winnings back or say parlay, which means doubling down, which means I take these chips and stack them on top. If I went for the long hold strategy of my core holdings here, that is essentially what I'm doing. Let's say my 100k Palantir somehow turned into 300. So essentially I'm tripling down on the position, meaning that if I keep winning, then my wins gets magnified. But if it goes the other way, if it went up 3 times and it dropped 30%, somehow I lost 90k from the top. I know it really doesn't matter because anything above is just profits, right? So you lose a little bit of profits, so what? You ride it out. To me, I like to consistently win and build confidence that way. So let's say my $10 stock within the 2-year time frame went to $50 and right back down to $10. If I chose a buy and hold strategy, I would have been left with nothing. There would be no gains within the 2 years. But there is a time cost to things. Instead of holding a stock for 2 years that didn't go up or down, I could have invested in something else that has returned a positive value. So for me, the way I do it is keep selling these option contracts. So even if it went up to $50 and went straight back down to $10, I would have profited every step of the way. I wouldn't be able to quantify how much, but at least it's not zero. To me, that makes sense. Some people like the all in and then hold. That could be a winning strategy, but the name of the game is volatility, especially for these speculative stocks, in my opinion. So that is the way I manage risk. Okay, now on to number 4, reflection and looking forward. Reflection. What could I have done better? I have secured my 100k position in the early phase. I'm very, very grateful for that. So I didn't have to chase when it somehow shot up 80% in 2 weeks. This is not something I anticipate. I just wanted a gradual win within the next 2 to 5 years. But if it shoots up this way, so be it. And my whole strategy of selling put and call options to subsidize for my long call home run plays has kind of worked out to perfection. This long call has tripled in value. And back to the risk management portion, I could easily just take out my 6k of principal and let the 11k ride as house money, because then no matter what, I wouldn't lose my money on these bets. Ultimately, all this is a bet because there's an expiration date. So I needed something to happen before a certain date. That itself is not an investment. An investment is something you can hold on forever and just hope that it appreciates in value. But this has an expiration date, so I needed a magnitude within a certain time. Both of them has to be right. Right now is not bad because it has jumped up 80% in 2 weeks. It's not sustainable. Same idea with the stock itself. Let's say if we take out 20k of profits, that can subsidize for any drops in the future because it's bound to happen. I don't know when. I don't plan to time the top or bottom. That's why I like to profit take along the way and just keep buying and selling along the way. Sometimes it's automatic, sometimes it's manual, but it has to be done in my opinion. And looking forward, I had a target of $20 within a year, but if it shoots up to $20, as I said before, I may sell some of this and throw it a little bit further away. Let's say in 2023. And we push this number to $30 or $40 even, because this is the home run play. We can't be conservative about the home run plays. So right now the stock is at $17.80. I wouldn't buy the long call for $15 because that wouldn't have the maximum leverage. For the maximum leverage, it needs to be out of the money. So at the beginning, when the stock was $10, I set the target at $20, 100% away. And this is how you get this magnifying effect. My 6K turning into 17K. That is the risk I'm willing to take because it's pretty much like a free play for me, since I sold all these option contracts throughout the last couple weeks. With this research on Palantir, Alex Karp, and Peter Thiel, I found a quote that's very interesting. Mark Zuckerberg, the CEO of Facebook, has said that this quote from Peter has changed his life. And it might change ours as well. In a world that's changing so quickly, the biggest risk you can take is not taking any risk. I really think that's true. As do I. As I mentioned before, I could have easily just stuck with my engineering job and rode with it forever. But that is the capped life. A couple weeks in, while I looked around, I couldn't really see my future. And it wasn't the ideal life for me. So I made the jump, being an entrepreneur and somehow turning into an investor. With how convenient it is to learn nowadays, either through YouTube, Skillshare, or whatever it may be, you can learn so much on the side. Let's say you put in 30 minutes a day on your side hustle, your side business, and somehow it turns to an hour a day, turns to 2 hours because ultimately you're enjoying it more than your full-time job. And eventually it can replace that while giving you more freedom to create and to live your life the way you want to live it. Like that, to me, is the ultimate goal. So this was my thought process behind my Palantir bullish play. What do you think about it? Is there any nuggets you found valuable that you can implement on your next investment? Let me know in the comment section down below. Again, thanks for watching. If you found any value in this video, drop a like and subscribe to the channel. This really helps to get the message out. Take care, and I'll see you in the next one.